All right, let's dive into the intriguing world of Reminiscences of a Stock Operator by Edwin Lefèvre and uncover the secrets of one of the most legendary traders of all time. This isn't just a story, it's a guide to solving your personal finance problems through the eyes of Jesse Livermore, a man who made and lost fortunes multiple times. Imagine this. You're 14, working as a quote boy in a bustling stock brokerage office. The noise, the excitement, the constant flicker of stock prices. It's chaotic but fascinating. This is where our hero, Jesse Livermore, begins his journey. With keen observation and a sharp mind, he starts noticing patterns and trends in stock prices. Livermore didn't have fancy degrees or financial mentors. He had his eyes, ears, and an insatiable curiosity. Lesson 1. Observation is key. Livermore's early success was built on his ability to observe and learn. In personal finance, the more you observe market trends and investment opportunities, the better your decisions will be. Start paying attention to financial news, follow market trends, and educate yourself continuously. Next, imagine the thrill of stepping into a bucket shop, the early 20th century equivalent of a gambling den for stock speculation. Livermore makes his first trades here, developing his own methods for predicting stock movements. His sharp intuition and quick decision-making skills pay off, and he starts making profits. Lesson 2. Start small and learn by doing. In personal finance, starting small allows you to learn from your mistakes without risking significant capital. Begin with smaller investments, test your strategies, and gradually increase your exposure as you gain confidence. Picture Livermore standing in a crowded room, the stock ticker clattering away. He watches the tape, the continuous flow of stock prices, and starts to understand the importance of trends. He realizes that the market's movements are often driven by crowd psychology. By following these trends, he can make profitable trades. Livermore's ability to time the market, knowing when to buy and when to sell, becomes his signature skill. Lesson 3. Follow the trends. Understanding market trends can significantly improve your investment decisions. Whether it's stocks, real estate, or other assets, recognizing and following trends can help you maximize your returns. Now let's delve into the psychological aspect. Imagine the emotional roller coaster of making a fortune, then losing it all. Livermore experienced extreme highs and devastating lows. Through it all, he learned that maintaining emotional control was crucial. Greed, fear, and hope can cloud your judgment and lead to poor decisions. Lesson 4. Emotional control. To succeed in personal finance, manage your emotions. Develop a disciplined approach to investing and avoid making impulsive decisions based on short-term market fluctuations. Stick to your plan and stay calm. Visualize Livermore's strict rule, cutting losses quickly. He knew that admitting mistakes and minimizing losses was more important than holding on to losing positions. This principle helped him preserve his capital and stay in the game, even after significant losses. Lesson 5. Risk management. Set clear rules for when to cut your losses and stick to them. Effective risk management is crucial in protecting your investment portfolio from significant downturns. Imagine Livermore waiting patiently for the right opportunity. He never forced trades when market conditions weren't favorable. His ability to wait for the right moment contributed to his success. Lesson 6. Patience and timing. Patience is key in personal finance. Don't rush into investments without proper research. Wait for the right opportunities and be willing to hold your investments for the long term. Picture Livermore adapting to changing market conditions. He knew that the market was always evolving, and strategies that worked in the past might not be effective in the future. His ability to adapt and innovate kept him ahead of the curve. Lesson 7. Flexibility and adaptation. Stay informed about changes in the financial landscape and be ready to adjust your approach as needed. Flexibility is essential for long-term success. Finally, imagine the pitfalls of overconfidence. Despite his numerous successes, Livermore's overconfidence led to significant losses. He learned the hard way that the market could humble even the most experienced traders. Lesson 8. Stay humble and grounded. Recognize that you won't always be right. Stay humble, continuously educate yourself, and avoid letting overconfidence lead to reckless decisions. Applying Livermore's lessons to personal finance. 1. Continuous learning. Always be willing to learn and adapt. Stay informed about market trends and new investment opportunities. 2. Start small. Begin with smaller investments and gradually increase your exposure as you gain confidence and experience. 3. Follow trends. Pay attention to market trends and use them to guide your investment decisions. 4. Manage emotions. Maintain emotional control and avoid making impulsive decisions based on short-term market movements. 5. Cut losses quickly. Set clear rules for when to cut your losses and stick to them to protect your investment portfolio. 6. Be patient. Wait for the right opportunities and be willing to hold your investments for the long term. 7. Adapt and innovate. Stay flexible and be ready to adjust your strategies as market conditions change. 8. Stay humble. Recognize that you won't always be right and continue to educate yourself to avoid overconfidence. Reminiscences of a Stock Operator isn't just a book about trading. It's a guide to understanding the complexities of the financial markets and the human emotions that drive them. By applying Jesse Livermore's principles, you can navigate the financial world more effectively and achieve your personal finance goals. Remember, success in personal finance requires continuous learning, emotional control, and a disciplined approach to risk management.